Stocks finished mixed during an uneventful and shortened week of trading. But don't be complacent. Disposable personal income per capita has been declining in real terms for 19 straight months. This is not just in dollar amounts, but also in dollars adjusted for purchasing power. We are now level with 2019. In other words, Americans have lost 3 years of financial progress. Savings has hit a new low of 3.2%, while credit card debt has jumped to a 20-year high and is still climbing. Inflation is still embedded. Plus, wage costs are rising in sectors like hospitality, retail, and manufacturing. The latest housing price data shows annualized housing inflation at 15.4% year over year, even as the buyer's market is mostly locked up. And this is the very essence of stagflation, rising prices amid declining output. And although it may seem strangely calm out there this holiday season, the underlying realities are nothing but. An economy cannot live this way, with business deleveraging even as households are taking on even more debt. All the while the currency is being devalued. But that, my friends, is how the cookie crumbles. And today we're going to take a quick look at 3 charts, beginning here with the 20-year monthly chart on the Fidelity Nasdaq Composite Index ETF, and the symbol is ONEQ, and this serves as a pretty good proxy for the Nasdaq. And as we can see here, we topped out at that point there. We had a very steep decline all the way down here, and perhaps we're in the very, very early stages of a bottoming and basing under that 50 EMA, but well above the 200 EMA. Let's move on down here into the volume. Nothing to be seen there, so we'll move on into the MACD. You can see that large separation between the slow line there and the fast line here, which just went under that 0 line, and that means we're going to spend some time perhaps in a choppy, volatile manner, bottoming and basing here, even if we are in the beginning stages. You can see again the beginning stages here, definitely a bottom and basing, but we're at -2, so we have a long ways to go before we get to that 0 line. So be patient. Into the price rate of change, you see a little bit of sawtoothing going on, still a good separation between the fast line there and the slow line here. Again, also very negative, down at say -15 and -8. Moving here into the relative strength index, it looks like it wants to bottom and base, at least by this oscillator. This is the worst that we've seen so far, and it looks like it wants to improve, but we're still well below that 50 or midline. Again, time is needed to improve. You go back here into 2008, 2009 through 2010, it took a long time. I think we're going to take a while here. It's been, say, almost a year from the decline, perhaps even longer if you go up to this point here. So don't be in a hurry. Now, the stochastics, this indicates that perhaps bottoming and basing here, the stochastics tend to have more of a V-shaped bottom if it is the bottom, as opposed to a move here that moves on up and fails. So we'll have to watch out for that. So don't be brave, just be patient. Moving here into Williams, same thing, bottoming and basing, very negative, even more negative than 2008, 2009, which is hard to believe, but the chart doesn't lie. Moving on up here, one last look at the monthly chart, and you can see perhaps the very early stages of bottoming and basing. Let's now go to the weekly chart. And we're now looking at the 2-year weekly chart using the same ONEQ. And let's take a look at this channel that we're moving through. Say starting up here, moving through like that. You can see the bottom trend line there and the top trend line moving through like that. Now, We've come off of that bottom trend line. We're moving on up, and we're tangling with the 20 EMA at this point here. We'd like to see it move a little bit higher to this point, if not through the 50 EMA here and also through that upper trend line. But it's going to be very dicey once we get moving on closer to that trend line. So watch it closely, because we might fail and get reflected back, and that could be painful on the way down. Moving into the oscillators, again, volume here is declining, is not what you want to see, but that just is one small warning sign. Here in the MAC, all looks good with a base at this point, but this base here is higher, showing some improvement. We do have the fast line moving through the slow line, showing a little bit of acceleration. We have to watch that because it's just beginning, but we'll see if it continues to move on up here. It's going to be relatively weak because we are still under that zero line. So be cautious. Into the histogram, you can see pretty much the same thing. It does show improvements all the way through here, and it has turned positive, of course, with that fast line moving through the slow line, so it is going to be positive. But I think the main MACD is still a bit weak, and we see some weakness here. The price rate of change, we're below that zero line. It continues on down, which is not a great sign either. So a couple of red flags, some mixed oscillators, and once again another mixed oscillator with the bottom and base there, and this shows improvement, and we're at the 50 or midline and about to go up and through. So again, we have a mixed bag. Into stochastics, it has a ways to go. It's bottomed and based here. It's showing some separation between the fast and slow line moving on up, but we're still below 50, so it's still weak. Be careful. And then same thing here in the Williams. Let's go back up to the price chart. Look at that trend line one more time, and note that we are going to possibly have some risk added once we get further up here and we approach that trend line. Again, we may get reflected back down, and that could be painful. All right, let's now go to the daily chart. And now the 6-month daily chart on the ONEQ, and you can see here a nice dish forming bottom and basing there with the move on up. It moved through the 20 EMA, the 50 EMA. It eclipsed this level here, so things are looking good. It had a little bit of a turn here reflecting back down, but it came back down to, say, the 50 and the 20 EMAs, and it's bounced up, but that bounce is relatively weak. It could be the holiday trading sessions. But let's do a look at the oscillators. Volume's not going to show too much, but here, of course, the MAC shows nice bottoming and basing, long dish, moving on up. It's had a little bit of trouble here, as well as a little bit of trouble here, and this is a very shallow separation between the fast and the slow line, so look for a possible failure of the fast line and perhaps to cross back under the slow line someplace in this area here. Just watch for that. I'm not saying it's going to happen, but it definitely is weaker at this level than we were back here. But as you can see, there were several times where there was hesitation in the market, but not as much hesitation as there has been here or here. So be careful. Moving into the histogram, you can see those hesitations there and there. So there is some weakness. We're coming on down here, so the possibility again of the MAC turning down and the fast line moving through the slow line. Here, price rate of change has steadily gone up for several months, continues on up, so that again is a mixed signal. Here, same thing, relative strength has also been heading on up for several months, so that's a good sign as well. The stochastics, though, perhaps in another mixed signal, is perhaps showing a topping process, so we'll have to watch out for that. Still below that overbought territory, so there is a little bit of weakness, and again we see similar weakness in the Williams with this level here and that level there showing a little bit of decline in the power of the market. That could be, once again, holiday trading, but keep your eyes on it. One last look at the daily chart, we do have a nice bottom. We are moving on up. We do have, though, a long ways to go before we reach that level. We'll probably have to reach this level, see how it tests that, as well as that level too. So there's a lot of upside, and there's a lot of upside resistance. So be patient, keep watching, and I think we're still going to have some other opportunities of buying stocks in, say, the near future into the first quarter. So no need to be hasty or impatient. And for today, that's ChewDog Charts. Thank you.